Hello traders, welcome back to the Forex Gig where we dive deep into the tool that can help you make smarter trading decisions. In today's video, we are going to explore one of the most reliable reversal signals in Forex trading called the Bearish MACD Divergence. Whether you are a trader that trades major pairs such as the Euro USD or the GBP USD, understanding bearish divergence will give you a significant edge in spotting exhausted uptrends. So by the end of this video, you would know exactly how to spot this setup, understand precise entries and exit points, and avoid common traps that can catch most traders off guard. Stay tuned as we break down each component step by step to ensure we can apply this knowledge to our next and very everyday trade. Now, what is this bearish MACD divergence? Let's begin by understanding exactly what a bearish MACD divergence is all about and how it matters to our trading. When price action shows a higher high, like you can see here, price is showing a higher high in an uptrend, but the MACD indicator, this is the MACD indicator, it is showing us a series of lower low. As you can see, price is making a higher high here and the MACD is showing us a lower low. We have a bearish divergent pattern forming. This disconnect between price and momentum often signals that buyers are losing strength even though price continues to push higher in some cases, as we can see it here. So the MACD indicator consists of two crucial lines. As you can see, this blue line here and this yellow line here, these are the two crucial lines. So we have to pay close attention to this line and their interaction during an uptrend. When you spot the MACD making a lower peak when the price making a higher peak, this is the first signal that the price is about to be exhausted. As you can see, a higher high, then the MACD is making a lower low. Now there's something I would also like to inform you guys about the MACD histogram. As we can see, this is the MACD histogram, this series of bar charts in between the MACD indicator. They also play a vital role in confirming divergence. Watch how the histogram become progressively smaller during a divergent formation. You see, because we have a divergence over here, it is becoming smaller. So this can also be used as a confluence when trying to trade the MACD divergent setup. Now let's dive into how and what the strategy is all about. Now, to understand what the bearish MACD divergence looks like, let's focus on how to trade it effectively. The key to success lies in waiting for the right confirmation signals before entering your trade. Now, remember we talked about, first of all, we have to see the divergent form. When the divergent form, we have to look at the histogram to see if it is progressively making smaller bars. Then the third one, we have to see if the two lines of the MACD indicator cross each other. So these are the conditions that we wait for price to make when trying to take this strategy. Our entry requires three specific conditions. First, we wait for price to make a clear higher high, like I said. Then secondly, we confirm that the MACD is showing a lower high. As you can see, this is a lower high during that same period in time. Then finally, the most important one is to wait for the MACD line to cross below. As you can see, this crossing here, this is the trigger for our entry. So the moment we see this, remember this is a reversal pattern, we have to take our trade. Now let's see how we take our trade. We put up our short position exactly at the point where price crossed each other. At this area, put our short position there. Don't forget your stop loss should be at above the most recent swing high, that's at this area, because of is an uptrend, to avoid any fake out or price whipsawing upward, and to give the trade enough room to breathe. While our take profit will look for a previous support where price has reacted from before. This can be an excellent level for profit taking. So here can be a good level. This area too, this particular area can also be a good level for take profits. Remember that we should always aim for a minimum of 1:2 risk to reward ratio, meaning your potential profit should be at least twice your risk. As you can see from here, from this trade here, we would make our profit at least twice our risk. Yes, that has been shown in the chart. Never risk more than 1 to 2% of your trading account on a single divergent trade. Always calculate your position size based on the distance between your entry and the stop loss. This disciplined approach ensures that even a string of loss won't significantly impact on your trading capital. This trade resulted in a win trade, as you can see. So let's ask ourselves, if this strategy is as good as he said it is, what if they have some common pitfalls? That's fake outs, traps. So we need to address the crucial pitfalls that can affect traders when using the bearish MACD divergent strategy. This will help us avoid costly mistakes during our trading the MACD strategy. Now, an example, this is a false trading signal. As you can see, if we were relying solely on the MACD strategy, we our prediction for this market reversal would have resulted in a lost trade. Many reversals occur due to divergence, and sometimes divergence appears without leading to a reversal, like from this example here. So we need to take it with additional confirmations before taking the trade. So if you can see, if we had taken this trade from this area, it would have resulted in a loss. So we need to take the trade with additional confirmations. Now, the second pitfall can be when you are trying to take a bearish MACD divergent strategy trade in a sideways moving market. Now, as you can see, this is an example of a sideways moving market. The market is moving sideways in this particular area. And if you look at the MACD, you can see that the MACD is giving us a series of fake signals. Is making the market here is making series of higher lows. That I'm talking about in this range box, making a series of higher lows, and the MACD is making a series of lower highs. If you can look at it, you see this is an example of fake outs. So when you see a sideways moving market, you avoid taking a trade in such areas using the bearish MACD divergence strategy. Now the third pitfall can be when you are trying to take the trade when you see a sharp price movement. A sharp price movement, like as I was saying, when price make a sudden sharp movement, like from this example, price was making a series of higher highs, higher lows, and all of a sudden price made this sharp movement to the upside. When we see a sharp movement, looking at the bearish divergent indicator, you can see price made a lower low here, while price was making a series of higher highs and higher low. Before you know it, we would expect that here there should be a reversal at this area, but because price moves sharply, and we already know that when price moves sharply out of an area, is often a fake out, so we wouldn't have taken this trade because it would have resulted in a loss if we took this trade. So we need to avoid taking trades when we see a sharp price movement. Then thirdly, we need to fourthly we need to avoid taking trades when we see multiple divergence. As you can see, there was the first divergent at this area, multiple divergent before an actual reversal occurred. Do not get discouraged if you see the first identified 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 divergent doesn't lead to immediate results. Instead, wait for additional confirmation to signal and maintain proper risk management regardless of how convincing the divergence may look. So we might take a trade because we see a divergence and it gives us all our signals, and it doesn't mean that the trade might work out. If we had taken a trade here, we would have taken a loss, because it's not all divergence that works. So we have to add our confirmation, our other confluences, to make sure that we are taking the right trade at the right time. And even if we take a loss, because we maintain proper risk management, we will be able to our account will be able to survive to see another day. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do well to like, share, and turn up your notification bell so that you won't miss out on any of our trading tips and strategy. Thank you for watching the video, and I will see you in the next video. Peace.